Hello, everyone, and welcome to the Only Land Fan Show. My name is Kendall Lejeune, and our guest today is Amanda Webster. Amanda Webster is Fund&Grow's Chief Operating Officer. She joined the team in 2020 with vast legal knowledge and over 20 years of management experience, and she has been pivotal to the company's continued growth. Amanda is the CEO's right hand to ensure all departments continue to run smoothly, works with the management team to improve processes, and coordinates employee events to foster a healthy work environment. Amanda, thanks so much for joining us. How are you today?
Thank you so much for having me. I am great coming to you from sunny Florida. I don't know where everyone else is, but that's where I am.
Love it. I love it. I am so excited to talk to you today because when I first found out about your company and what they're able to do for land investors, I was blown away because I hadn't heard very many people using business credit to fund land deals. And so we're talking today about land investing made easy, how business credit funds your next deal. Before we get into that, can you tell us a little bit about your company, Fund&Grow, and how does it work?
Fund&Grow started way back in 2007. It was actually birthed out of the impending crash that a lot of investors lived through. The owner and founder actually was doing HELOC investing for real estate purposes back then and needed to find a pivot. And this ended up being in a weird spot, and especially back in 2007. But basically, what we do is as much of a white glove service as we legally can to strategize, get you in the best position, obtain the actual business credit for you. It's a 12-month process because think about it, when you were 18, you had to start building your personal credit. It takes time. It's not a quick thing. The EIN business credit's very similar to that, except for because of the wisdom and knowledge and connections and relationships we have, we're able to accelerate it. So we're able to get you from zero, hopefully to 250,000 or more in this business credit in that 12-month time frame. So we do as much of the heavy lifting as legally possible, and then we actually coach you and teach you the things that we can't legally do for you. But we are there holding your hand even during those moments. So it's as much of a white glove service as we can provide.
That is incredible. Talk about a value. I know several friends that I have that work with Fund&Grow for their own personal business credit, as well as I have several clients that sing your praises as well. And so I know that you've been very instrumental to the growing of their land businesses. But this idea of using business credit to actually fund land deals, not very many people are talking about that. So can you give us a 30,000 foot view of what that looks like?
So when you think of business credit, what most people don't understand is the majority of that is business credit cards. Business credit cards are the exact same thing as a business line of credit. They're just housed in a different vehicle. So you can actually use it. It's revolving, unsecured debt you can use for anything and everything. Now, people think I'm crazy when I say this, but even to purchase real estate, land, a car, if it is valid for your business, you can purchase anything and everything. And it is revolving. Therefore, you do it, you pay it off, you do it again. You don't have to keep reapplying like you would for, say, a business term loan. This is something that is set in place that not only will be there continually, it's going to continue to grow naturally. You're going to keep getting increases and different offers to be able to continue to grow it. We specifically target 0% offers on the front side so that you have, at a minimum, hopefully 12 months. At a maximum, we try to get you 24 months because there's a merge process we do within these accounts so that when you're leaving the 12-month program, we're hopefully, at least for a couple of the offers, restarting that 0% at 12 months again. So it's an entire kind of like strategy to get there, and you can pull an ACH or wire transfer money from these accounts into a deal, and it's going to look like cash on the endpoint. So the escrow agent, the title company, the attorney's office, however you're closing on your deals, or even an end-to-end buyer, it's all going to look like cash on their end.
That's incredible. That's incredible. So especially if you're using these types of funds to close and you've got 0% interest, that's practically free money, right? Until you have to pay it back, of course. But in terms of the APR, that's fantastic. That's fantastic.
Yeah.
So If someone's listening to this and they're like, I don't know a ton about business credit. I know that once I started my business, I might have gotten like a Spark card from Capital One, but I just use that here and there. How does one really go about establishing business credit? How does it relate to their personal credit in terms of building that? Calling all ambitious land flippers, ready to transform your business with proven systems and processes? Imagine this. One of my students recently closed 2 land deals and got another under contract in just 24 hours. That's the power of a well oiled land flipping machine. My exclusive coaching program is specifically designed for action takers just like you. We'll build out your entire operation from lead gen to dispo, implementing these systems on real deals from day one. But hurry, I'm only accepting 3 new students until 2025. If you've done deals, have a growth mindset, and are ready to scale, visit kindlecall.com now. Let's turn your land business into a consistent profit powerhouse.
Yeah. So first of all, I'm going to give you one warning. That Spark Capital One card actually does report on your personal credit, so be careful. But most business credit does not report on your personal. But the reason your personal comes into the picture is because you're like a 18-year-old kid that doesn't have any credit when you're a brand new business. You need to leverage something. And the easiest thing to leverage is your existing personal credit to be able to show that you are not a high risk person. And therefore, typically that will translate into you're not going to be a high risk business owner. So the lenders, and these are all major lenders, are going to look at your history. And it's not just your credit score, it's your behaviors within your credit, right? So it's going to look at all of the activity that's available in that 7-year window to make sure that your revolving personal debts, you have been having those as a healthy relationship and then leverage it on that side. But the beauty of that means you can fund a brand new business, a brand new LLC, even a sole proprietorship that you have an EIN number for, that you haven't even established a full business. All of that qualifies for business credit, and you don't have to provide tax returns or pay stubs or any type of bank statements. It all is based on that leverage and then projections for your business. So it's a super low entry, easy threshold to get tens of thousands up into hundreds of thousands of dollars in this leverage that can get you from point A to point B, right? Because most loans on the business side, you need probably 2 years in business with some healthy financials to even qualify. So this gets you to that point, and it can be in place forever and free money. You get cash back, points for rewards, all kinds of stuff with these types of accounts as well.
That is fantastic. Now, you mentioned this lower barrier to entry. If someone's listening to this and they're like, I'm not sure if my personal credit would even allow me to be able to do something like this, what are some of these minimum qualifications in terms of qualifying for this type of credit building?
Yeah, so there is a score component, right? So we say you need a 680 credit score, which in today's market, it's pretty average for most Americans. But when you look deeper, you also need to make sure that the person has a good mix, meaning typically you want to see 2 revolving accounts on your personal with major lenders. So Capital One, Wells Fargo, Bank of America, Chase, Amex, Discover, the main ones. Elon is a huge lender that has a bunch of different cards they underwrite for, Capital City Bank and things like that, US Bank, any of those, right? You want to have at least 2 of those. And they also like to see some type of installment history, whether it be a car loan, a mortgage. It doesn't matter if it's still open, just still showing that you had the account and it always remained in good standing. A couple of lates are okay. We can get around to a few lates, but it can't be a bunch of them and it can't be super recent. And then the last thing to look at is to make sure you're not shopping for credit. So your inquiries also come into play. So you don't want to have a bunch of inquiries within the last 6 months. They want to make sure that you haven't been with what they feel is high risk for shopping.
Yeah, that's really good. Now, if someone may be listening to this and they say, I feel like I might be a little bit under that 680 or my credit's not exactly where I need it to be, what are some tips that you can give someone to start preparing their personal credit for this type of process?
In today's society, the biggest issue is utilization. So I have seen people, and what I mean by utilization is you have a $10,000 Capital One card and you owe $9,900 on it. Okay, so that's a really high utilization, right? The healthy point is 35% or less of the available credit on each individual account. It's not an aggregate. Revolving credit, every type of credit is scored a little different in the modules. So revolving credit, if you have, as soon as you hit 40%, it's going to start going down. And then as you go over 40, it's going to tank. I have seen people lose 100 points on their credit just from utilization because they feel you're high risk at that point because you clearly are in debt and that they don't want to extend any more credit because then the likelihood of you defaulting becomes higher and higher. So that's one of the biggest things that I see is just utilization. It's the easiest to fix in the sense of it's clear cut, you know exactly what you have to do. Funniest thing is credit card interest rates on the personal side are pretty high. They've been high for many years now. Hopefully we'll see some changes in that to come. But as of right now, they're high. So you're actually better off if you don't already have one, getting an unsecured personal loan and taking the credit card debt over to there. Two things are going to happen. One, your utilization is going to go down, so your credit score is actually going to go up, even with that new account hit. But two, personal loans are scored differently. So you can go all the way up to 95% utilization and it's not hurting your credit score. So it's sometimes just about how you're leveraging it and understanding how the scoring modules work. And they work the same in the sense of the behavior on all three bureaus. Scoring can be a little different, but the behavior that they score is exactly the same across all three bureaus.
That is really great advice. And so this idea of getting an unsecured personal loan to be able to pay off the credit cards, lowering that utilization rate, does someone go about getting an unsecured personal loan? Where should they go? Do you have any tips about that?
Funny enough, the marketplace ones like Lending Tree, Lending Club, even NerdWallet, they have really good, they're more like search engine networks that they use. So they end up doing a soft pull typically, which won't hurt your credit, to extend offers to you. And they don't pull your credit until you accept one of those offers. So one of those, because then you can see if you have multiple options on the table. And typically, unless your credit's really bad, typically the interest rates are going to be less than your credit card. And they're not compounded the same way. So interest rates on credit cards compound daily, average daily balances versus monthly and yearly that you see in term loans. So that's one of the things you can not only cut your interest rate, but you actually have a set payment with a set end date that's not going to be 37 years from now, like your credit card with your minimum payments would be.
Wow, that's amazing. I had not heard of that before. That's
Yeah.
fantastic. I love that. Now, it sounds like obviously you have a lot of command of the knowledge in this particular area. And what perked my ears up when you were talking about what Fund and Grow does a little bit earlier was this coaching component. Can you talk a little bit about what that looks like in a program? So let's say I want to build my business credit. I go to Fund and Grow and say, I'm your clay, mold me. What does it look like and what will you do with me in that process?
So we learned several years ago that sometimes the secret sauce isn't what gives you your value, and what gives you your value is a lot bigger. So that's when we made the switch because we didn't always do the coaching model. So we decided that it would make more sense to teach our clients how to continue to grow this after the 12 months because this is the type of credit that's there forever. So what we do is we do the strategy. We're there picking the offers that we feel are best for you. The client does have the full authority to approve or deny any of the offers that we suggest. We do the applications. And then from there, we actually coach our clients on how to talk to the underwriters because, yes, business credit cards actually have underwriting departments at each of these lenders. Personal credit cards don't have that. So we even coach clients very successfully on how to take a denial and not only overturn it, but overturn it into a card that has tens of thousands of dollars on it. So we coach you on all the things that we've learned over these 17, 18 years on how to talk to these underwriters, how to get them to understand. Because remember, when you apply for a business credit card or personal credit card, it's a computer algorithm that's approving you. It is telling you whether you're worthy of the credit and how much risk factor do you have. So when you apply for a business card, you get three options: approved with an amount, denied, and I'll send you a letter and tell you why, or pending, I need more information, right? Pending any more information is typically just they need to verify some information, nothing crazy. Underwriter's gonna call you, and that's not that hard to get through. But the denial, most people just stop. So we coach you on how to get through that. And then on the next round, because we do 3 rounds over the 12 months, we also coach and show you how to properly position yourself to request high level increases continually, how you're going to do that, when to do it, what you need to be at in order to do that. Because just like your personal credit, when you have existing business credit, you need to have very good behaviors and you need to be at 50% utilization or less in the business credit space. So if you already come to us with a business card, we coach you and tell you that information as well. And you also need to understand how business credit builds, which we're teaching you that as well. And the only things that really matter in your business credit score is the fact that you have trade lines, you use the trade lines, and you pay them on time. That is the only components that make up your business credit scores with Experian, Equifax, and Dun & Bradstreet. That's the only thing they care about.
Wow, that is a value right there. Just being able to have someone to teach you long after the 12 months is over, how do you
Yeah.
continue to grow with this? That's fantastic. Now, let me ask you this. You talked about rounds. Can you break that down a little bit more? If someone comes to you and they're brand new, what can they expect in that first round? And then what do those other rounds look like?
So when you come to us, we typically do either a consult before you sign up, or you can sign up online and then we do the consult within usually a couple of days. We want to do it really quick. We have a 60-day money back guarantee just to make sure everything is going to be attainable for that client. But we're going to do a strategy call on the front or right after that's going to do a prequel. And we're going to tell you exactly what you can expect. It's a range with your profile, given everything we know. Average is we're going to get you to funding, hopefully within 10 to 15 business days. You could be quicker if you're super ready to go and everything's good to go, or if you need to do a couple things, it could be a little longer, because sometimes people come in and their credit reports don't match some things, so we got to get them to update some things. But we tell them exactly what they're looking at, what that timeline is. We get you to the first round of funding. The first round is going to be anywhere from 30,000 up to 100,000. It just depends on the profile because it's heavily on the personal credit side. Then after we're done with the round, a round takes about 3 weeks from applications to finalizing, because we want to talk with those underwriters. We want to get you increases even right as you get those cards. We're still going to ask for increases on the ones that we can. Then we're going to also coach you, how to work on getting the inquiries removed, because when you apply for business credit, the lender, not Fund&Grow, but the lender will do a hard pull on one of the bureaus. It won't be on the same one for all of the lenders, right? So it's all over the place. So you're going to have a couple inquiries. So we give you the package on how to hopefully get them removed. Usually the success is you can get 2 out of the 3 bureaus to remove inquiries. They never like to all play nice in the sandbox. And then we coach you on the proper way to use the credit in between rounds. And you're going to have 3 to 4 months in between round 1 and round 2, where you have time to use the credit, pay on the credit, show behaviors that the lenders want to see. We're going to bring you back into funding, make sure you're all set to go again, apply, rinse and repeat type of situation. And then we'll do it again for a third time. And the hope is on the third round, we're also able to do what we call merging, which is basically, think of it as you have a chase card you get in the first round. We then apply for a different chase card in the third round. And we're going to merge the available credit from the first card into the second card, which now has 0% interest again. So you're restarting the 0% interest at the end of it. Now, you can't do that forever. Everyone's like, why can't you just do it forever? You can't do it forever. There's only so many card offers that they have. But at the end of the day, if you're creating ROI and you're smart, this should be short-term holding, right? It shouldn't be something after the 0% is over. It shouldn't be something you're holding debt for a long period of time, but it should be enough to be able to close deals, find better long-term funding, because I think anyone who's in the investing space knows much easier to get funding when you already own the property. So
Yeah. That's great. So you mentioned earlier about how to use the credit in between these rounds. What are some rules of thumb that you typically teach? This is how you should be using the credit when you first get it. Imagine having a complete toolkit for success right at your fingertips. That's exactly what you get with Only Land Fan School, our premium online community. For a low monthly fee, access our treasure trove of resources: the on market deals course, acquisitions tool suite, and Dispo Secrets library. Plus, connect with fellow flippers in our active community. Whether you're hunting for deals or closing sales, Only Land Fan School has you covered with step by step guidance and insider knowledge. Ready to supercharge your land flipping journey? Join Only Land Fan School at olfschool.com today.
So the rule is aggressive purchasing, and I don't mean tens of thousands of dollars on the first purchase. I just mean that you're actively using it on a regular basis. I like to say do 5 smaller charges before you do any charges that are in the thousands, just to make sure the banks are okay with it. If you jump to a $10,000 purchase, first purchase, might have a problem, might hit some fraud filters. But if you just get gas and maybe you buy some office supplies or buy your client dinner, whatever, if you just do a couple smaller ones, it'll make it easier. But aggressive purchasing, meaning you're actually using it, and aggressive payments. So an aggressive payments can be 2 to 3 times the minimum payment. That's all that means by aggressive. And at the end of the day, you need to be smart to make sure that you've built in enough time planning to be at 50% utilization or less when you get to round 2. Now, the beauty of business credit, when we're done building and you're not in a building phase anymore, you can max out business cards all the way to the limit, and it does not hurt your business credit score. It actually is healthy to create behaviors that you are using and paying off and using and paying off to high levels. As an example, I use Fund&Grow's business credit to purchase everything humanly possible for the office, for travel, for anything that I'm doing, for anything the company needs. And I'm doing 2 things. I'm building the score and keeping it healthy. We do weekly payments to make sure that we have healthy behaviors with them, but we grew to having non-recourse commercial lending that no longer required the personal guarantee, that no longer required the personal credit. So Fund&Grow as a business can go out and get multi-million-dollar loans now, and nobody has to sign for it other than Fund&Grow on the EIN side. And that is what most people don't understand, that at the end of the day, that's what building business credit does for you. It opens up so many doors of funding that you can't get unless you have 2 avenues. You take the time and build some credit, or you somehow have this amazing business model that makes tens of millions of dollars that they can now trust that you're going to be good to go.
I love that so much. This is really scratching my brain in a really cool way. So let me ask you this. I know that I talk to so many different people in different stages of their land journeys, and a lot of people that are just now becoming business owners bring with them this baggage of maybe some wrong thinking about credit, or maybe some things that we've been taught to think about how to use personal credit. And so just the word credit makes some people's skin crawl. So, can you talk a little bit about what are some mindset things that people can look to business credit that kind of shatters those old beliefs of the personal credit and really demonstrates that this is a tool that's necessary to grow your business?
So the first thing is first, stop listening to Dave Ramsey, because Dave Ramsey has a very valid 1 point I will give him. The American dream should be that you can be completely debt free. Okay. It's a great dream to have. I love it for myself also. The difference is most of us are not born with a silver spoon and have the ability to not leverage debt to get to that point. So I think it is 100% a teachable mindset. I don't think they teach this to the high school students, period, as far as responsible credit. But in this world, cash will always be the king of things, right? There's no argument there. Or maybe crypto, who knows? I don't know where that's going. But credit is like its counterpart. So I always say credit is queen. It has to run hand in hand, because you can't even go get a utility account without having good credit or high deposit, right? So it's either cash or credit. And if you get credit, you get to keep more cash. That's literally how that works. But there is a responsibility point is you need to be responsible because credit card debt on the personal side can get out of control quickly. The difference is credit cards in the business sense are no different than going to get any other type of loan in the business world. Every type of business, again, unless you're born with a silver spoon, is starting with debt leveraging, right? It's always starting with some kind of debt, whether your debt is to an equity stakeholder because they gave you money to start your company, or you got an SBA loan, if you could even qualify. That's not a fun process to go through. It's a great tool, just not a fun one to do. Or if you go in and get private funding, again, crowdfunding has its own, everything has its cost though. Everything, unless you have a great grant writer and you qualify for some grants, there's always a cost to everything you're doing. So it is a mind shift setting of like debt leveraging is how you get moving forward. They always say that wealthy people don't own, they all rent, right? Because the property they own, they're money making properties to them, right? They don't want to live in their money making properties. It's the same thing in business. Every great business it started from a loan in some capacity. Figuring out the right loan, figuring out what you can even qualify for. Business credit isn't for everybody, but it probably is. They just don't understand how to use it.
That's really good. So debt should not be the four-letter word that most of us have have grown up to believe. You just made a really interesting point. You said that business credit should be for everyone if they understand how to use it. So can you talk to us about some common uses that you see your clients that are using it really well to grow their businesses? What are some instances?
So the easiest its strongest way is if you're using it, that's something that's going to have an ROI, right? Not everything you do in business has an instant ROI. And I understand that. There's sometimes it's a long game for things. For business credit, in the beginning at 0% interest, you could use it for anything because technically there's no interest and you're not really having to spend money to do it. But you do have to have a plan to pay it back. You have to have a plan to know that at that 12-month or 18-month mark, it's going to start having interest. Now, it doesn't go backwards like some of those horrible furniture store offers that they do. If you don't pay it off, it's now all this interest comes in. It is moving forward, but you have to have a plan. But ROI based things like, for an example, paid ads. If you have a great paid ads campaign that you're going to be able to make enough profit to pay it off before the interest is going to hit, that's a no-brainer, right? If you're going to go to, some people go to say trade shows and they're selling things at the trade show. If they make enough money, paying for the trade show makes sense. When you get to the Fund&Grow level, we use it for everything because we have income coming in. It's a way to extend our cash flow. And that's the biggest thing for us is extending it and then getting access. We use it mostly for the cash back. And every quarter, we're getting tens of thousands of dollars in cash back that just goes into the bank account. And we never paid any interest because we pay weekly payments. So if you're just changing the mindset of don't use your cash flow immediately, put it on business credit, spread out your cash flow a little bit bigger, that's going to get you to the next deal, maybe an extra deal. And you can, not, I don't say 10x, 2x first, then 4x, right? You can't just go to 10x. I know that's like the golden thing of everybody, but sometimes you just need an extra 10 grand or 20 grand to get an extra property or get an extra deal to be able to have enough ROI to then go, okay, this month I got 2, next month I can get 4, next month I can get 8, and then you start getting to that point of compounding it, but always having a backup plan, guys. You need to always have a plan that if that one deal falls through, how are you going to pay back that money? And that's true whether it's business credit, even if it's an SBA loan, there's monthly payments built in. You have to make those payments. So it's at least with business credit, you have the flexibility of you only have minimum payments at 1% of what you owe. And on the months that you don't owe anything, you don't have any payment, right? So if you have a month where you didn't need it for that month, you don't owe anything at that point. It's just sitting there for when you do need it. So it's all about strategizing the right way to use debt that's going to make sense for each person's business. And again, it should be used for all businesses, but I can't educate everybody apparently.
You're trying really hard. That's good. I think I heard you mention typically minimum payments, or maybe not typically, but you said something about minimum payments are around 1% of what you owe. Is that typical across the board for most business
Yes.
credit?
Yeah.
Okay, excellent.
Yeah.
We've talked about some of the ways that we should be using business credit. What are some of the common ways that you see people misuse business credit where they start to get into some trouble and things start going sideways?
All right. So there's a really good, easy golden rule, and I use it for personal as well. Your personal credit, your personal purchases go on your personal accounts. Your business purchases, your business credit go on your business account. So if you keep that as the first rule, always a safe bet. Don't buy shiny objects unless they're gonna make you money. I did have a client buy a Tesla.
Mm.
It didn't go well. He got the Tesla, but then all of his business credit got shut down. And when you think of it like when you have charge off on your personal credit or anything like that, it takes years to recoup in that world. So he wasn't able to get any more business credit for I don't even know how long. Like it was years before they would even touch him again because he didn't use it for business use. Cash advances, don't do that on business cards. It makes it look risky. It's also going to have a higher interest rate. It's not going to qualify for 0% interest. And there's ways around it. There are other ways to pull cash if you really need it than doing it that way. There's third party reputable companies who we give that resource to our clients as well. We give them options of like different merchant account companies who will process and pay, but it's B2B only. You can't pay yourself. You can't pay to your own bank account. Don't go set up a Square in your business name and then charge your business card to yourself because I promise you it might work once or twice, but they're going to catch on and they're going to not only are they going to pull your business cards, they're going to put a red label on your merchant activity and might stop you from being able to get future merchant accounts. And depending on your business, that could be a huge problem.
Yeah,
So,
that's terrifying.
yeah,
Yeah.
there's a lot of terms. It's not illegal. It's the terms of service that Visa, MasterCard, Amex, Discover have. And as long as you just keep it B2B and don't do B2B to two businesses you own either, they will catch on to that eventually. Just follow that rule, those golden rules, and you'll have no problem. It's something that they just want to make sure that you're a smart business person, that you're going to be low risk and you're going to continue to pay your bills. That's all they care about is you pay your bills. So just make sure it's B2B and you'll never have a problem.
That is great advice. When I think about personal credit, because of course, every time I think of credit, my mind goes to personal credit. One of the things I've heard said very often, I know many people follow this rule, is and we talked about this a little bit earlier about using debt as leverage, but I know a lot of people that won't touch their credit cards unless it's an emergency. So I'm
Mhm.
thinking about from a business standpoint, what are your thoughts about, oh goodness, the deals didn't close that we thought were going to close this month? Should I use my business credit for operational expenses to pay my payroll? Talk to us about that. What are your thoughts about that?
So it's definitely a good safety net in moderation. It's like diets, right? Everything can be good in moderation. But so you need to be able to have some type of long-term plan. However, what I will say is if this type of credit can get you through those struggles, at least you didn't fail. Let's be real, like 80 something percent of businesses fail due to lack of capital. If they had just known there were options to get these little pieces put together to get them over those hurdles. How many businesses closed during COVID because they didn't have any money, even with the PP money and all the PPP or whatever the heck that was going on. So, point being is if it's a need, sure. If it's going to keep your business functioning, sure. But also understand if you default on a business credit card that you've personally guaranteed, it's tied to both sides. So you definitely want to be as safe as you can. The other piece I would say, because of Dave Ramsey, which is why people have the fears, and I only use credit cards for emergencies type of situation. I love points and rewards and all the things that come on both personal and business cards. So there's free money to be had, but there's also some fraud protections that people miss. I don't use my debit card for anything on my personal side, and I don't use the business checking card for anything in the business side because it's tied directly to my cash, whether it's personal or business. So there's also some fraud protection. So therefore, if I'm using my credit card and that gets compromised, it's not immediately attached to my cash. Yes, they may charge, but every company out there has fraud protections and fraud processes to be able to recoup your money and your accounts, and it doesn't hurt you, right? Imagine you're a business and you're using your business checking card that they give you at the bank, and somebody wipes out all of your cash flow. That can be a game stopper for people. They were using business credit. They would only be able to get up to the limit of that card. And most cards don't have $100,000, $200,000 on one card. There are some that do get some big amounts on there. But my point is they can only go to that limit. And typically you're going to catch it pretty quickly if you have the right alerts and stuff and you're checking on things. So there is a fraud protection piece that's there both on personal and business cards. And that's just the way I operate. And again, anti Dave Ramsey. I actually love him. I think he's very smart. I just think he's missing some points in life.
That's, that's a good distinction. That's a really good distinction. If someone is listening to this and they say, okay, listen, I completely understand this business credit card thing. I think I want to do this. How quickly can they get up and rolling once they get into your, like, let's say today is day one and I'm going to contact Fund and Grow. And when can I start using my business credit? Hey there, Land fans. If you're enjoying this episode and would like to see more episodes like this, please be sure to let us know by liking and subscribing below.
Typically, I'm going to be able to get you into funding. If your credit's in in position, your business is good to go, it's reporting correctly, all the things, because we got to make sure it reports to Secretary of State and we can verify who owns the business type thing. All said and done, it should take 1 to 2 days to process the file, get you over to the funding department. It's going to find a spot on the calendar. I have a full floor of funders, typically 5 to 7 business days to get you into the application date. And then depending on the card, 5, 7 business days to get the cards. Technically 3 weeks, I would say, is probably a good estimate if everything aligns and you're ready to go. So it's fairly quick. And even if we're still working on like credit increases and stuff, you're still getting the cards. You can still start using it. We want you to start using it even when we're doing that stuff.
Excellent. And so I know that you've had lots of experience working with many different investors from different areas, from single family houses to land. What are some of the coolest uses of business credit that you've seen where you've looked at it and been like, that is genius. That's really smart.
I have one client recently that made me so proud, and I don't even know why I feel proud for him, but he's a Burr guy. He has the Burr method going, but he has a son who's 17. Can't get credit yet for him, right? But he wants to teach him. He doesn't want to go to college. I think he already graduated a little early from high school, and he's seeing the Burr thing. So dad lets him use the business credit cards, and they pull the money, they close on a property. Not only do they close on the property with the business credit cards, they even built into the deal the renovation costs. So they transferred all the money to the closing agent, got cash at closing to pay cash for renovations because they had a lot of people who didn't necessarily have a business set up. They were just like mom and pop type people, paid for the actual renovation. He ended up deciding not to burr it and to sell it. And the kid made like $80,000 at 17, leveraging 0% business credit. So the only cost he had for his capital was to transfer the money for the closing was 2.5%. That was it. That was the only cost he had for the capital. He netted out of that deal $80,000. And it was just crazy to watch because they diaried the whole thing and then they brought me onto a call. I was shocked. I probably had the biggest shock face when they told me the story live on their group of this 17-year-old kid using business credit to purchase his first property, renovate it, flip it, make 80,000, and then now he's going to do it again, but this time he's going to hold and actually refinance it and rent it out. But he's got an $80,000 pocket sitting there right now. And he said, then the next one, he'll do a flip again. And this kid's going to be a millionaire by the time he's 21. It's crazy.
Love it. I love that. That is so cool. That is so cool. Yeah. So Let me ask, what are some of the trends that are happening in the business credit world that you think are going to impact real estate investors, whether it's a positive impact or a negative impact? What are some of those trends that you're seeing?
So if, I put a big if, because politics are always an if the incoming administration does everything they said they were going to do, right? Because when they're on the campaign trail, we never know what things are going to happen. But one of the things that he did previously, and I hope he keeps his word and does it again, is he is notorious at deregulating the financial industry to allow small business owners more easy, accessible capital to be successful. So a lot of people don't realize that same administration during his administration, he had double the amount of SBA loan approvals that went through for small business owners than what the current one does. He's the initiation force behind the PPP loans that made thousands upon thousands, tens of thousands, I don't even know how many businesses survived COVID because of the PPP loans. And then also, he helps specifically smaller regional banks to lighten the cost that they have to be able to give capital, which they're the ones that are usually lending the most to the small business world. So I think if that continues, we're going to see more and more capital available a lot easier for small businesses, which is going to be pretty much all the investors that I work with, because they're all in that small business category, have access to funding. I'm also hopeful the Fed rate keeps going in the direction it's been going in, and that's going to keep interest rates going down, because even the business term loans and traditional business line of credits, which we do have that department in our wheelhouse as well, those interest rates have been horrendous in the
Mm.
last couple of years. So even people who had 2 years in business and could qualify for those higher level loans, the terms on them were not favorable. We've started to see those come down as well, which is a great shift. So I'm hopeful. It's an if. I'm hopeful we're going to see it. I think everybody can agree. We all want to see a really strong economy. We all want to see things happen that help us all be successful. And that's what I hope for. And that's what I'm seeing. I've definitely seen the lenders start lending higher limits per account recently. So I think they're seeing some of that same traction, which is a great sign in my world.
Yeah, that's great. Let's hope that it continues down that trajectory. That's fantastic. So let me ask you this question, and I think I might know the answer, but what would you, who would you say business credit is not for?
It's not for a business that's past, say, the 10 million mark annual revenue, because they probably, it shouldn't be, it's not for it. Fund&Grow is not probably for them, because they can probably go ahead and go to their established relationships that they have and obtain really high level lending that they can get without any assistance. So I think it's more for your seasoned public companies, large companies. None of them are really going to care about this because they have so many other pieces. This is more for the people that are, this is a side hustle that they're trying to turn into their main, trying to quit that, W-2 job. This is a newer business with very limited options. This is a business that's been around forever and has ran out of capital, hit a hurdle, any of those types of things. And then lastly, the biggest target for us is the high risk, which is investing. Real estate investing is considered high risk in every lending platform. And that's why we target that area to help them the most, because they don't have a lot of options. So it's more for the people that have other options out there. They don't need business credit necessarily. They can still use it, but they don't need it.
Yeah, you bring up a really good point. You've mentioned this several times throughout our conversation today about having a plan, having a long-term plan. So let me ask, if someone is in this volatile world of real estate investing, we know that oftentimes cash can be very lumpy when it comes to cash flow. And so if they are thinking, gosh, I could really use business credit to grow and maybe do some OpEx and do some marketing and keep things consistent so I can start seeing more consistent results. But I'm terrified of what if I can't pay the bill? What types of advice would you give those people in terms of building these long-term plans in order to be able to keep their heads above water when they start using business credit?
Start small, right? Just because you get $100,000 in business credit available to you Doesn't mean you have to use it all right away, right? During the building phase, yeah, we want you to use it, but we want you to shift your spending habits so we don't want you to overextend yourself while we're building it. Once it's built, you don't have to use it. Start small. Don't hold a running balance of more than something you're comfortable with until you've built a cash flow safety net somewhere else, whether it's in a don't do a savings account, but some type of high yield investing account so that you have a return, because the savings account, you're getting like what, 0.5% if you're lucky. So there's a lot of different things out there that you can get high yield. So get a cushion over there before you dip in a little deeper. But at the same time, everything in business has a risk factor. And I know it's a cliche, it's like high risk, high reward type of thing, but you do have to build up that tolerance sometimes. So maybe start small. Maybe say, okay, you know what? I'm not going to hold any more than $10,000 in any type of debt for now, because I know I have a good safety. I could pay that off in a couple months, even in the worst case scenario. I wouldn't necessarily jump in and go, okay, I'm going to do $90,000 in business credit and I have no safety net. It's literally figuring out your risk appetite of what you're comfortable with. I would say don't take off more than what would take you 3 or 4 months to pay, because after about 3 or 4 months, that those interests, once interest is there, the interest rate is going to start compounding and get overwhelming. So you want to make sure you have a plan. Now, if you have some deals that are going to come to fruition or happen, it's okay to hold a little bit more, because there's always a little bit of cost of capital to everything. But I think start small, take a little bite before you dive in and eat the whole pizza.
Yeah, that's really good advice, especially if someone is not used to having access to $100,000. Like it could be especially, I know I'll just speak from the land side of things. Like that can go really quickly, even if you don't buy land. Just, oh, I need this shiny CRM and I need this and I need that.
No
You
shiny
can,
things. I
no,
told you, no
there
shiny
you go.
things.
There you go. No shiny things. Take that away yeah, with put that on a poster somewhere. No shiny things. I love that. So, what is it that you've worked with so many people in terms of building their business credit? What is it that you wish people knew about the business credit industry?
I think it's just them understanding the long game of what this could do and the doors it could open for you. Because we didn't talk about it today. There's also vendor credit, and that's part of our program too. That's more like that's non-recourse, non-PG, direct vendor lines. Think of Home Depot corporate or Uline or
Mm.
Amazon corporate. Those are great. They start really small, but we teach you how to build those as well, all of which is one umbrella. But at the end of the day, like I said, everybody gets scared of the PG, gets scared of a personal guarantee, gets scared of anything on the personal credit, right? The best way to get rid of it is to build the business credit. And then you can get all these different loan options that are just on the EIN. Your social security number isn't even needed anymore. They don't even care about that anymore. So I think it's understanding the long game of what this could do. We bought 2 different buildings with commercial non-recourse credit because we had done the work over the years. So we were able to buy, one of them was like 650, one of them was $1 million building, and we were able to get mortgages that were only on the EIN. There was nothing tied to the owner of the business personally. So if it had failed, all they can do is take the building. They can't come after anybody else. They can't do anything. They can't even really come after the business because it was a secured mortgage. But the whole terms is they can't come after the personal, and you're divorcing yourself. You have to divorce yourself from your business so that your business can have its own identity. And in the long game, that's going to be where it's at. That's going to be what's going to give you the ability to make millions of dollars and not have to worry about your personal credit coming into the game.
Yeah, that sounds like an entire world of possibilities, right?
It
Um,
is.
so I know we've talked about this offline before. Recently, I have a lot of listeners who are not American citizens. And so how can those people go about building business credit if they're interested in doing that?
So there's a couple things they have to know. They have to have a US based business. Of course, that's the number one for any lending in the US. They need to have a US, some social security numbers. I know you can't get those. They don't just hand them out freely. There's a whole process that goes with that. The ITINs, you can build personal credit on that. You can get to a point, certain lenders will allow you to build business credit, but usually with people that are not going to be able to get to that point on this direct path, that's the person that I direct more in that corporate vendor trade line path because they don't care at that point. As long as the EIN is in the US and the business is here, they will extend credit. So it's a little different, longer path, but it doesn't mean you can't build it. And once you do the work to build that, then you can still get that commercial lending. Maybe it won't be a normal business takes 5 to 7 years of building business credit and making sure that your business is growing to get to that non-recourse commercial lending side. I usually say you want to be at 5 million in revenue before you can really open that door. But if you're the lower side, it doesn't mean you can't get lending. It just means you might not get as high of a level. Instead of getting $1 million loan, maybe you only get a $500,000 loan, right? But that can be a huge door for people. So I push them more in the corporate credit side. We don't have that as a standalone service yet. I am working on it. I hopefully in the next 6 months, I will have a standalone service that is just the corporate credit side. That's nothing to do with your social security, nothing to do with your credit score, to help the people, because there's a huge segment of people that either can't build credit or have really bad credit from very normal things. Life events happen and things, divorce, someone dies, whatever. So we are developing that program as well. And if someone needed it now, I have a referral source. I got someone who does it, just does that for now until I build it out. But it's just one of those things. It's just going to take longer.
Got it. That's really good insight. I love that. So let me ask you, what is your personal superpower?
I have the, I feel it's the most boring one ever. I've been asked this a couple of times. People are like, I don't know. That's like a famous question now, I think. My superpower is basically finding holes in processes, finding things that are a misstep or something. So I have this ability to be able to look at an SOP or look at something and be able to tell you why it's not working. It's just one of those things. I came from law before I came into the finance world. And I did the same thing in law firms. Fixing processes is just, I love it. I'm weird. I like to write SOPs and I'm weird, but is finding the holes that are holding you back is the best way I can describe it. And it doesn't matter what industry, because it's all the same no matter what industry you're in. It's just, do you have the right processes? Sometimes it's the right people. There's a whole thing in that too. But yeah, even just designing people's job descriptions, sometimes it's not done as properly as possible, especially in the small business space, because you don't necessarily have the ability to have an HR person to do it. So that's pretty much my superpower.
I love that. Finding the holes that are holding you back. I think that's the title of your next book, Amanda. I think we found it. We've cracked the code on that one. So let me ask you, do you have any favorite entrepreneurs, business owners, thought leaders, authors that you like to follow?
So you might know the guy that I lean on quite a bit. His name is Tom Kroll.
Oh, yes. He's a mentor
And
of mine.
I talk to him sometimes once a week. Funny enough, I don't pay him anything. This is all just for free. No, he
He's
is
such a
somebody.
giver. He's such a
He
giver.
is.
Yeah.
I have known him since he had Wholesaling Inc. before he sold it. And no, he's just phenomenal person in general. He's just super awesome, super giving. And I try now, I'm like, hey, is there anything I can help you with? It's usually no, but I still ask the question. But he is such a great person to know. And he has taught me so much. And he always answers. Anytime I have a question, I can text him. He's gonna give me an answer. And he's very honest, which is what I need. So
Yeah,
he's
that's
my faves.
remarkable. I love that. I love that. What's your biggest passion or goal you'd like to achieve at this point in your life?
Weirdly, my biggest I've always had a passion for teaching in the traditional sense, except for I can't make money being a teacher because the Florida system doesn't have enough in there. But my biggest passion, weirdly enough, is that I want to teach high schoolers how to be financially literate. And in some cases, some adults, because it's a huge missing piece in society. I didn't have it either. And I had to learn the hard way as a young adult that credit has to be paid back and that there's these interest rates and all these things. And even when I had my first card, it showed up at 18 years old. It was $300 limit. I still maxed that thing out and then realized I have to pay it back. So learning that is a huge passion of mine and teaching that out. So I actually work with our local school system now in trying to help wherever I can to educate. I just actually recently did an event teaching teachers financial literacy. That sounds funny, but they don't understand some of the basic things. What is the true cost of refinancing your house? And does it make sense? Things like that. A lot of people just don't think about.
Yeah, I love that because I completely agree. My background, I was a teacher. I taught music in the public school systems, and that is something that is just really not taught many places is financial literacy. So it doesn't sound funny to me at all that you taught teachers,
Yeah.
about financial literacy because I think that's something that is just missing from our mainstream curriculum as a whole. So I love that. I love that. That's incredible. If you could go back and teach your younger self three pieces of advice when you were just starting out as baby Amanda into the world, what would they be?
Don't go to college. It's a waste of time. For me, now that's not advice to everybody, but for me, my degree, it just didn't do anything for me. And all it did was create debt. And I had some great scholarships. So I wouldn't have went to college. I maybe would have finished my associates because I didn't have any debt from that. But I never did anything with my bachelor's degree. It didn't do anything for me. It never opened a door. Everything I've gained has been from what I call OJT, just getting on the job and learning it and having amazing mentors, first in the legal and now where I am now. Yeah, that's always opened every door for me. The degree never did anything for me. I would have had my kids closer together so I wouldn't be a mom for so long. I love being a mom. I have 5 kids
Wow.
and
Wow.
they range from 16 all the way to 2. So I've literally been a mom for 16 years and I have at least 16 years left to go. So I would have had my kids closer together. No, and probably honestly knowing about financial literacy, just knowing some things some lessons that I had to learn the hard way. And I don't even, it's not my parents' fault. They didn't have that lesson either. It's just one of those things. So I wish I would have known some of those pieces because I was a 20-year-old kid. I sold my first house at 21 and I had $60,000 handed to me in cash.
21.
We don't want to talk about what Amanda did with that money. Nothing of any value other than paying for all of my friends to go out and party, paying for my apartment, living my best life at 21, right? I didn't do anything with that money of value. I didn't have any debt, but I didn't have any money at the end of the day when it was all said and done. So had I had some good financial lessons, I probably would have been a little smarter with that. If I had put that in an investment account and not touched it or an IRA and not touched it, it would be great right now.
Yeah, I could imagine. But hey, what a story. Like now hey, I know what I'm talking about. Let's talk about financial literacy. There's so much power in knowing how money works and just being able to be financially literate. So I think that's a beautiful passion and purpose. So thank you for that. I want to thank you so much for giving to us today. You've been so generous with your knowledge and with your time and your expertise. What are you looking for? How can we give back to you? What connections or resources are you currently looking for?
I would just encourage whether it's by coming over to Fund&Grow and seeing if we're a fit or learning some things on your own, just look into business credit. Learn about how it can help you, obviously being smart with the plan, but being able to open doors that could land you an extra deal, get you to quit your 9 to 5 job because you can now devote that time to it. But looking at ways to open your door because capital can be the main key to being successful. And so whether that's here or somewhere else, you owe it to yourself because this is your dream, this is your passion to do everything you can to be successful. So check out business credit. I'm telling you, it is a beautiful thing if you use it the right way.
So good, so good. And so if someone wants to check out business credit, especially through Fund and Grow, you actually have a few gifts for our Only Land fans audience. Can you tell us a little bit about that?
I do. If you use the link we've created, there's a $500 off discount. We are a flat fee model. That's one thing that I didn't even talk about at all because I wasn't trying to pitch anything for you guys necessarily. But we're a flat fee model. So we charge you one fee no matter how much credit we get. Anybody else in our space charges a percentage of funding obtained. So we're a flat fee. So we give you $500 off of our 12-month membership. And we have what we call a partner upgrade, meaning it's a BOGO. you can bring a partner, and it doesn't have to be your business partner. It can be your wife, your husband, your girlfriend, your boyfriend, your whatever, your cousin. It doesn't matter. You can bring another person into our program at no additional charge. They get their own account. You're not sharing information. You don't have to co-sign each other. That's not how business credit works. They can either be part of your business or part of a completely separate business. Doesn't matter. And it's the same price. It's a true BOGO. We're going to give you two different people the same service for our flat fee model. And with the $500 discount, it ends up being $34.97. So just under $3,500 for the whole kit and caboodle.
Wow. Okay, so a couple of questions. I have some follow-up questions. So first of all, since we're talking about business credit, is there a way that I could put that 34.97 onto some business credit? How does that work? Could I do that?
So we do have payment plans. And the what I tell people is if you're ready to go, you don't have a bunch of stuff you got to work on. And we can tell you that ahead of time. You don't have to, you can actually call us, tell them you heard about us from Only Land Fans, and they'll still give you the discount if you don't use the link, but you have to tell them who you came from. But you can do a 5 payment plan. Now there is a finance fee built in, but hold on one second. And you can start for $847. And typically, if you're ready to go, you can get your credit in before the 30-day mark. And if you pay the remainder balance before the 30-day mark, we will waive half of the finance fee as well. So you'll end
Hmm.
up paying a small finance fee to do it. But yes, you could pay the 5 payment plan, get it started for as little as $847, and then pay the rest off with the credit that we obtain for you.
I love
Oh,
that.
and 100% tax deductible is our service. We'll even give you the IRS code for it.
Ooh, it just gets sweeter. I love that. I love that so much. And I meant to ask this about the program. As far as the coaching goes, is there like a once I sign up for this, is there a hotline that like I have a business credit question, can I just call and talk to someone, or how does that work?
You get assigned what I call a client success advocate who you can reach out to at all times during your membership to ask any questions you need, and they will get you the answers. Even if they don't know the answer, they're going to get the answer for you. So, yes, you have an assigned rep that you can call, text, email, anytime, well, during business hours, but that they'll respond to you and get any questions you have answered while you're with Fund and Grow. And then we even have an extra offer where we have a premium coaching add-on that if you want to have after you leave Fund and Grow for $50 a month. Right now, I'm going to be raising that price later, but right now it's $50 a month, where you still have access to myself and the executive team and the funding experts that come in and we do coaching calls and stuff. But you can also continue to ask questions and things like that through that avenue as well.
I love that. I love that. So we've got coaching, we've got education, we've got done for you services, which I love. White glove done for you services. Sign me up any day. So if people are interested in taking advantage of what Amanda is offering for our OLF audience, you can just go to startfundandgrow.com. Super simple, startfundandgrow.com, spell out the word, and we'll also put that link in the show notes and in the show description so you can check that out and to get a free consultation to see what's up. How do you do that? All right. I want to thank you so much. Thanks so much. Amanda, thank you. This has been so enlightening, so valuable. Thank you for joining us. I'm super excited to hit the ground running with business credit and making sure that we're utilizing that. Thank you everyone for joining us. Sarah, Sandra, Haley, everyone that streamed. I hope you have a fantastic Thanksgiving. I'm so thankful for each and every one of you that makes this community the vibrant, educational, thriving community that it is. And Amanda, again, thank you for being so generous with your knowledge and with your time. So until then, take care, be safe. We'll catch you in the next one. Bye-bye. If you're interested in hearing from other 6 and 7 figure land flippers about how they've built and run their businesses, then check out my group, Only Land Fans, where I do a live interview each week inside the group. You can grab that link at the description below. Until then, be great, have a great week, and catch you in the next one.